I want us to solve a fresh question that you can all follow with full attention. Good. So please, let us start again. So you have a question here. So the following trial balance was extracted from the records of the consolidated fund for the year ended 31st December 2022.
Yeah, please, you are not sharing your screen.
Okay. Please, can you see my screen now?
Yes, please.
So
Following
please,
trial balance.
can you put page?
Can I do what?
Post the question in the page if it's possible.
Let's follow. Let's follow. When I finish, I'll give it to you to go and complete. I will not finish it. Okay. Good. The following trial balance was extracted from the records of the consolidated fund for the year ended 31st. I want you all to follow. Let's follow. Just pay attention. Listen. When you finish, you try it. Okay. When you finish, you try the question. Good. The following trial balance was extracted from the records of the consolidated fund for the year ended 31st December 2022. Perfect. So we have the debit and the credit as usual. This is the trial balance. We have the footnotes. I'm targeting this particular question because of this table. Now, ICA, they have been asking a lot of questions relating to this kind of tables, okay? That's the inventory. It has come like twice on a row. So, then the next one, so prepare statement of financial, prepare in compliance with the IPSAS. A, statement of financial performance. B, statement of financial position. You understand? Yes. And B, discuss two advantages of classifying expenses by function in the preparation of statement of financial performance. Perfect. So let's begin. Please, when you go to examination, don't waste time. First of all, identify which type of financial statement you're preparing or for which kind of entity. So over here, you see that this relates to the consolidated fund. Yes, so once it belongs to the consolidated fund, let's ensure. How do you confirm that? Look at the revenue. You see, you have corporate tax, you have personal income tax, you have taxes on general goods and services, you have import duties, you have export. Yes, it means that it is correct. So quickly, don't waste time. First of all, answer. This is my answer booklet. To the right. Nice meeting you. For the year ended 31st December 2022. Nice meeting you. Perfect. To the right. Ghana cedis. How many zeros? It's a million, right?
Hello, sir. Hello, sir.
Yes, please. Can you see my screen?
Yeah, please, your heading, is it supposed to be consolidated fund of Ghana or consolidated fund?
Consolidated fund of Ghana, consolidated fund. Don't worry. Anyone you are correct.
Okay.
Revenue, underline something. So revenue, you have direct tax, indirect tax, non-tax. Then you have grant and donation, total revenue. Please mute yourselves. Please mute yourselves. Go to expenses. Nice. So for expenditure, what do you have? We have compensation, goods and services. We have consumption of fixed capital. We have interest. We have other ones. As and when they come, we write them. Are you okay? Subsidies and the rest. As and when we encounter it, we write it. So don't conclude it yet. Good. When you finish, go to the B. Statement. Don't start off with a statement directly. So write consolidated fund of Ghana. My boss, are you okay with this? Good. So write statement of financial position. Statement of financial position as at 31st December 2022. 9:20. Good. You have your million here. Million, huh? You have your assets here. Non-current assets. Like I keep saying, when you get here, always divide your book into 4. Huh? You have here. I want to divide my book into 4. So this one always non-current asset is not that really much. Current asset is always plenty kakra. Current asset. Current liability. Non-current liability. Accumulated fund. Okay, good. I'm done. So let me add one myself. Statement, in case we permit it, of changes in equity. You can ask you to write statement of changes in equity. I've added it myself, even though it's not part. So you go to the last one. Consolidated fund. What do I have? I have note to account. Into bracket workings. Perfect. So this is the skeleton, okay? So now the first note to account. First one, you write. Who can tell me what to write? Always, when you look at the question will tell you note 1. Look at additional information 1. This is where you have your first note to account. Additional information 1. You say that what? The financial statements are prepared in accordance with IPSAS, PFM Act, and what? Chart of account of Ghana. So you have to let the people who are about to use the financial statement, the users of the financial statement, let them know that this financial statement was prepared using IPSAS. Let them know that this financial statement was prepared using which kind of basis of accounting did you use? So right, say that what? This financial statement was prepared using accrual basis of accounting. Finish. A, B. This financial statement was prepared in accordance to accrual. Sorry. No more accrual. I've already written accrual. So was prepared in accordance with what? IPSAS. You are the student. Don't go and write IPSAS. Write it in full. Are you okay? Comma. PFM Act 2016 and PFM regulation 2019. Good. C. Tell them the depreciation, that's the consumption of fixed capital. So consumption of fixed capital consumption of fixed capital was or is prepared or was on a straight line, and the useful life of the assets are so always is given to you. Okay, consumption of fixed capital for the year is charged on a straight line. You see, it is here. Go and just look for it. The depreciation, they'll tell everything here. You repeating this alone, you are getting free text for just repeating this. So consumption of fixed capital is prepared on a straight line. That's what I'm thinking. Consumption of fixed capital is prepared on a straight line or was on a straight line. And the useful life of the assets are the useful life. Tell us the useful life of the assets. So motor vehicle is 5 years, land and building is 20 years, furniture is 4 years. It's as simple as that. Okay. Motor vehicle, 5 years. Then plant and machinery, 4 years. Okay, furniture, 4 years. Furniture, 4 years. These things are nothing. If you like, please, if you like, include another one called measurement of inventory. How inventory is measured. B. How inventory is measured at the lower of cost. And so how did they measure inventory? Inventory. There's a table. The following is at the year end. Printing material, not for sale. Consumable, not for sale. So it is not for sale. The inventory at the end of the year are not for sale. The inventories at the end of the year are not for sale. So it is inventory is measured at the lower of cost and the replacement cost.
Net and then replacement cost, yeah.
Or current replacement cost. You know how you write it. Replacement cost or current replacement cost. So stop, Mary. So without even thinking, I've gotten few ticks. Okay, at least I've gotten 4 ticks free of charge.
So we've not
Good.
included the amount in millions. So
In millions, yes.
Yes, thank you very much. Thank you very much. So once I've not included the amount in million, then it means that if I'm working, I have to bring the million. Everything I have to show million. Are you okay? But to make life easy for ourselves, it's one thing we are supposed to include. Hey, Old age is worrying me. So please, let me use a different pen so that those who are joining us for the first time, please, I beg you, after you write note to account at the head, at the heading, the next that should follow is for you to tell them, so note to account, bracket workings, like Italy. The next thing that follows is to write all amounts are in Ghana cedis million. So if the person marking sees this and you don't include the millions, they are okay. Or you don't bring the currency sign, they are okay because you have indicated it at the top that all amounts are in what? Million. You see, it's very key. Are you okay? Thank you so much, madam. Because I can't be writing million. I don't have time because of time. Thank you so much. So let's go. Proceed. Direct tax. Indirect. Okay. So you need space. Footnote 4 or note 4. Non-tax. 5 grants. Let me finish the revenue. When I finish, I come and do the expenditure. Are you okay? Let me finish arranging the revenue. So please, this is where the magic begins. Now, go straight to the question and go and look out for all revenues. Arrange all revenues according to the 4 line items. Good. So we have corporate tax. You and I know that corporate tax is what? Direct tax.
Excellent.
You and I know that personal income tax is what? Direct tax. You and I know that taxes on general goods and services is what? Indirect.
It's indirect.
You and I know that import duty is something related to import. So it is what? Indirect tax. You and I know that export duty is what? Indirect tax. Please solve more questions. You know that these things, you become very familiar with them. Gains and other gains, okay? Capital gain is what? Direct tax. Tax levied directly on the person who sold the asset. Communication service tax is what? Direct tax. Please, ICA will always bring these issues once it decides to test you on this. I beg you, solve questions to be familiar with the issues. We have royalty. Royalty is non-tax. We have fees and charges, non-tax. Just the credit side, though, because you and I know that the credit side contains the revenue. If you want, so far as you want revenue, go to the credit side. If you want revenue, go on there, it is at the credit side. Revenue is not at the debit side, it's always at the credit side. Good. We have investment income, non-tax. We have the next one, grant is grant. Grant is grant. Good. Come down. We still have credit here. Okay, external debt is a liability. Okay, good. So I think this one too is a liability. Receivable, no. This is payables. Yes, payables. That is that. Yeah, we are done. So please, those of you joining us for the first time, if you want on the statement of financial performance, if you want to, statement of financial performance is made up of direct tax. So it's made up of revenue and what? Expenditure. Statement of financial performance. The P&L is made up of revenue and expenditure. So if I need the revenue, it's on the credit side. If I need the expenditure, it's on the debit side. Expenditure has a debit balance. Revenue has a credit balance. So it is here. If I go to the statement of financial position, that's the balance sheet. If I want asset has a debit balance. So asset is here. Statement of financial position, asset is here. Then if I want equity is here. It's at the credit side. Equity. Liability is also at the credit side. So liability is here. These two, they are here. And this is here. So please know this. Know this. Everybody knows this. If you don't know this, you are the only one left out. So I don't go and waste time looking for revenue at the debit side. Thank you very much. So we are done. Let's quickly post them. So when you come here, quickly come and post them. Can you see that? Quickly. So we have corporate tax. 32,000. We have personal income tax. Personal income tax. 21,000. We have capital gain tax. Capital gain tax. 6,000. Good. So I've done this. I've done this. 6,000, 6,000. Capital gain tax, 6,000. I've done this. Can you see that? Good. Now, come to the indirect tax. So indirect tax, you have taxes on goods and services. Taxes on goods and services. How much? 40,200. We have import duty. How much? 44,000. We have export duty. 12,000. We have communication service tax. Communication service tax. 23,000. Good. You are done. We go to non-tax. Non-tax to what do you have? You have royalty. 4,600. We have fee and charges. 18800. We have investment income. Investment income. 2100. Then we go to grant. So grant, we have balance brought down from the trial balance, right? How much? 28,000. Good. So quickly, we've written this, 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 we've written this. Cancel it with a pencil or slightly with a pen. Are you okay? Yeah, don't go and do ash gush at the examination hall. You don't have time. So just strike through, strike through, strike through for you to know the transactions you have posted. For you to know the transactions you have posted. So in examination condition, you have your exam paper on your left hand and you have the answer. You'll be writing with your right. So once you write it, you cancel, you write, you cancel, you write, you cancel. It helps you to know the transaction you have posted. Are you okay? And make sure you open your eyes. You know why? Because every transaction you get correct, you get a tick for it. Every transaction you get correct, you get a tick for it. Every transaction you get correct, you get a tick for it. So you wouldn't like to get a transaction wrong. Perfect, perfect, perfect. This brings us to the end. Yeah, don't add them yet. Don't add them yet. So you finish everything. Are you okay? So let's go. 6. 6. You have the expenditure, which is compensation. 19th, we have 7. Goods and services. And 19th, we have this compensation is that it's not that plenty, but then it's quite a lot. So you have 8. Interest. That's public debt interest. Can you see that? Good. The rest, as and when they come, are right there. Are you okay? It's not always the case that you have all transactions on the trial balance. So let's go to the trial balance directly. Let's go straight to the trial balance. So I have my trial balance here. Good. So the trial balance, look at this. You have grant, 3,000. Can you see that? So come and write. Always goods and services is a lot. So please make sure you leave substantial space. So 9. Grant. Expenditure. I want to know it is expenditure grant. Balance brought down. 3,000. Can you see that? Good. I have established post. This will go to compensation. I've already written this. This will go to compensation. Casual labor. This will go to compensation. I have traveling allowance. This is allowance. So allowance. So I said all allowance goes to compensation, unless you want to fight with me. So we have compensation. We have T&T, goods and services. We have utility, goods and services. We have utility allowance. Where will it go? Compensation. All allowance goes to compensation. Okay. Unless if you are doing preparation of financial statements of local government, that one, you know that the allowance of the assemblyman will go to goods and services. Training, same simple, goods and services. Printing material, it's goods and services. Car maintenance allowance, compensation. Interest on domestic debt, interest. Interest on external debt, interest. Good. Let's go. Receivable is a balance sheet item. Balance sheet item. Motor vehicle, balance sheet. Land and building, balance sheet. Furniture, balance sheet. Long-term investment, balance sheet. Cash and cash equivalent, balance sheet. Subsidies, 1,200. Come and write it. 9. Right, 10 here. 10. Subsidies. Balance brought down. 1,200. In fact, subsidies. Subsidy 1,200. I've already written it. Cancel it. We have social benefits and other expenses. So I didn't write social benefits and other expenses. Let me write them. The book is not for me, so I have a lot of space to write them. 11. Social benefits. So other expenses. Do you know why you have to write them? If they are marking, you get tick here. Yeah. And when they go to the statement of financial performance, you get another tick there. You get it. So please write them. Even though it is one, still write it. Still write it. Just that be fast so that you don't waste time. Are you okay? Good. So now after I finish all my posting, obviously this will go to social benefits. This will go to other expenses. So let us quickly post the expenses. It's not that much. Let us quickly post them. So when you go to compensation, we have established post. We have established post. Okay, when you go to compensation, you have established post. Established post compensation, which is 63,000. When you go to, we have casual labor, which is 20,000. We have T&T, which is 4,000. We have utility, allowance, which is what? 2,500. We have car maintenance allowance. It's because of the allowance I'm bringing it here. Other than that, it would have been goods and services. Good. Then we go to goods and services. Obviously, we saw T&T, which is, I know this is never an issue. The posting of the transaction is never an issue. It's a footnote that most of you need discussions on. That's why I have to be doing group studies, group discussion, so that you'll be explaining it among yourselves. Take as many questions as possible. That's how you learn. Training, you have 10,000, you have printing. Materials, you have 1,000. Yes, you are done. Finish. Okay, so we saw social benefits. Social benefits, 2,800. Yes, 2,800. Social benefit, 2,800. So balance go down. 2,800 social benefits. Then we saw other expenses to what? Other expenses is 26,000. Other expenses, balance go down. 26,000. Good. So this brings us to the end of the postings. If you have any question, you can ask. Any questions so far? Please kindly unmute yourself and ask if you have any question. Anything bothering your mind? Why we posted a certain transaction in a certain way? Okay, good. Now, once you finish, obviously, please cancel all the ones you have passed. It is important so that in future, when you're preparing the financial statement, hey, I've not read, okay, the public debt interest. I think I've not written public debt interest. Yes, I've not written it. So we have domestic, zero. Because I was canceling before I realized I've not written it. Domestic and external. Interest too. Okay, good. Okay, good. Yeah, you see, if you cancel, you know the transactions you have not touched. All these are ticks. So please, it's very important for you to know them. Because once you don't post it, you don't get a tick. I'm done. So since there's no question, let's quickly go straight to the footnotes. So footnote 1. Footnote 1. Fifty percent of the grants received relates to social safety network programs sponsored by donor partnership. The condition of the grant is to ensure full implementation of the program, even though the grant has been received by government. The program is yet to be implemented fully. The transaction should be accounted for in line with sustainable revenue from non-exchange transaction. Revenue from non-exchange transaction. 50% of the grant received relates to social safety network programs sponsored by donor partnership. The condition of the grant is to ensure full implementation of the program. Even though the grant has been received by government, the program is yet to be implemented. The transaction should be accounted for in line with IPSAS 23, revenue from non-exchange transaction. Please, this one has nothing to do with the work. This one, it has nothing to do with the work. They just got it there. So please ignore it when you see these ones. When you see the IPSAS down there, every transaction can be related to an IPSAS. So if they bring at the IPSAS there, it has nothing. This transaction should be treated in accordance with IPSAS, something. It has no effect on the footnote. It's just there to so please, there's no need. Okay, so ignore that one and focus on the content of the footnote. So please, you and I know that when it comes to grants, before you can recognize that grant as a revenue, it means that you should perform the condition of the grant, or you should be able to perform the condition of the grant. There should be a higher possibility that you'll be able to fulfill the condition of the grant. So if I give you money, that take this money and turn into a gain. Take this money and turn into a gain. When you collect the money, even though the money has become yours, but you cannot recognize it as a revenue to you until you are 99.9% sure that you can be a gain within the year under review. If you cannot be a gain in the year under review, then that money you have collected is not a revenue to you. If you have recorded it as revenue, please subtract it from your books, because you cannot fulfill the condition for which I gave you the money. It's only when you can fulfill the condition that you have to recognize it as revenue. Do you understand it? So if you receive a grant, obviously the grant is a grant, it's a revenue to you. You have recorded it in your books. But at the end of the year, if the question tells you that you cannot be able to fulfill the condition, please, I beg you, subtract the money from the grant. Huh? You see, the grant, you treated it as credit. So debit grant. So that money in your hands, it becomes a liability to you. The money should be ready. You are ready to give the money back to those who gave it to you. So it's as if the money has become a liability to you. So you put the money under non-current liability or current liability, depending on the situation. If you give the money to them next year, put it under current liability. If you give the money to them after more than 1 year, put it under non-current liability. Full stop. If it is a grant for you, I don't know if you understand. If it is a grant and you see that they have written a condition that suggests that you cannot fulfill the condition of the grant, please don't treat it as revenue again. Debit the grant and credit liability. Actually, in this footnote, I called my wife and I gave it to my wife, please analyze this situation for me. Then somebody without accounting background was able to tell me that the money has not become your money yet. In fact, that's what she told me. I said, but because like they are saying you cannot fulfill the condition. So once she said that, and I say, yes, it makes sense. You too, it should make sense to you. But if you see a condition that says that, oh, they will be able to fulfill the condition, assuming they said, oh, they will be able to fulfill the condition, that one, go ahead and treat it as full grant. Are you okay? So look at the question. Let's take it again. 50% of the grant received relates to social safety network program sponsored by donor partnership. 50% of the grant received. It means that we have already received it all. It's in our book. The condition of the grant is to ensure full implementation of the program. Even though the grant has been received, by government, the program is yet to be implemented fully. We've not implemented it yet. So even though we have received it, it is not a grant to us yet. We shouldn't recognize it as revenue yet because we have not fulfilled it. We have not what? Implemented it what? Fully. So just go to the grant. God, Adewe, it is English. They say 50% of the grant received. So go to the grant. How much grant has been received? This is it. Or let me take it from the trial balance for you. Grant. There's it. Grant received, revenue grant. They didn't say revenue, they didn't say grants paid, grants received. So this one, 50% of this amount. 50% of this amount. We've not earned it yet. We have not earned it yet. So just find 50% of this amount and subtract it from the grant. So on earned portion.
14,000.
On end portion, you can decide to write it your own way. It's not necessarily going to write on end portion. You can write liability grant liability, anything you want to write. Please don't go and waste time and think about something. So 50% of 280. 14,000. Thank you, boss. You understand? This 14,000, remember, every transaction at the footnote has two treatments. Every transaction at the footnote has two what? Treatment. Every transaction has two treatments. And remember, the million or the Ghana cedis on top of the trial balance does not affect the grant, does not affect the footnote balances. You put that one to mind. This million on top here does not affect this. So when you see this 9 zeros, it means you have to cancel the million out. Okay, I think you know that. So quickly, let's go. 14,000, every transaction has full treatment. So please, this money, we have not earned it yet. So this money, let us send it to what? Liability. It's a liability to us. So subtract it from grant. Subtract it. Put it in brackets. Subtract it from grant. And send it to what? Liability. Send it to what? Liability. So liability is straight here. Current liability. Go and put it here. On end grant.
So why current liability?
Please, where do you want us to put it?
I thought to be non-current.
You can put it under non-current, you are correct. The question was not clear as to when we are paying it. But you see, PSA and CASA, let me tell you something about PSA. PSA and CASA, usually the transactions that go to non-current, usually it is the long-term loan, domestic debt and external debt, usually. By you putting this under non-current, you are not wrong, you are correct. Your question didn't tell us that you are paying it necessarily. But please, you, for example purposes, just put it on current. But practically, you know where to put it. Please, are you okay?
Yes, sir. Thank you.
You're welcome. Good. So we are done. Agbena, we are done. Let's go to footnote 2. Please, I beg you.
Mr. Stephen, please, I had network challenge. So can you please repeat this thing for me? The footnote too.
Okay, I'll come back to that. Don't worry. And don't worry, I'll come back to that. Okay.
Okay.
So don't worry. Next one. An amount of 6 billion is owned to employees of NAPCO. Remember, because of it, we are working in million. We are working in, how do you call it? Million, subtract these 3 zeros. Because they said everything is in million. So subtract it, these 3 zeros, and leave the 3, because everything is already in million. So just subtract the 3 zeros. Are you okay? The 6 zeros, and leave the 3 zeros. So 6,000 is owed to employees of NAPCO program. If, in fact, this question, this particular question, you see, last night, those who wrote last night, the exams before those who wrote last night, those who wrote before those who wrote last night, they wrote this question. And trust me, these issues were familiar issues. I see here, let me say, the same thing, the same thing, the same thing, the same thing. Just soft play into questions. Be familiar with issues. Soft play into questions. Don't go and think at the examination hall. You should have knowledge about every footnote. And we've done everything. Trust me, we've done everything. Look at this one. An amount of 6,000 owed to employees of NAPCO program, and the amount remained unpaid at the end of the year. So because of accrual concept, okay, whether you have paid or not, you have to record it as if you have paid. Accrual concept. You have to record an expenditure once it has been incurred. So why should the accountant decide not to pay? Why should the accountant decide not to write it in the books? No, we have to write it and rather show it as a liability. Is that also? So go to, this is NAPCO, non-established post. So go straight to compensation, then write NAPCO. Salaries arrears. 6,000. This same one, we are owing, so go straight to NAPCO salaries arrears. 6,000. You can decide to put these two under payables. You are not wrong. But usually, because of time, you don't have time to go and do. Just by the time you finish, you are already through with the balance sheet. Okay, good. We are done. We are done with this one too. You see, we passed it twice. Perfect. Let's proceed. A debt arrangement by the government has resulted in debt forgiveness for the country. You see, debt forgiveness. Once you have been my student before, you know how to treat debt forgiveness. You are owing somebody and the person tells you that, oh, I will not take the money again. Take it. Fact that show. It's the same as if you have received the money and you have used the money to pay the debt. It's the same thing. If you are owing me classes fee of 450 cedis, PSA, and I tell you, I will not take it again. Take it free. It's the same as I have dashed you the money. But the ungrateful one will be like, Sir Stephen didn't give me anything for this Christmas. Sir Stephen didn't give me anything. Meanwhile, you're owing me, I'm saying you take. And just still, because he didn't see the fiscal cash. So this is what happened. A friend of mine was marrying and she came for loan of 5,000 Ghana cedis. Then when I went to the program, I just whispered into her ears, you know something, the debt you came for, take it free of charge. Before I realized it was all over that me, I'm wicked. When I came for her, I didn't give her anything. So what I did was that I went to buy microwave, 700 cedis. And I'm the co-chair, no? Then I told her that give me back my 5,000. It was there that she realized that she didn't reason. You understand? Because me telling you that, oh, the 5,000 came for, use it as your expenses. It's the same as I've dashed you 5,000. That is what we call debt forgiveness. It's the same as I've dashed you 5,000. So when you look at this arrangement, look at it, they say that what? A debt arrangement by the government has resulted in debt forgiveness. Made that chow. Of how much? For the country. The external creditors have written off 40% of the debt without condition. The external world creditors. The external world creditors. Pay attention. Assuming it was internal creditors, that means it is domestic debt. External creditors means it is what? External debt. So go and look for the external debt amount. Calculate 40% on it. That is the amount that we are using for the debt forgiveness. Is that also? That is so. So going for external debt. Debt will be at the credit side. So external debt, anyway. External debt, 520,000. So 520,000, we go. 520,000. Okay.
208,000.
External debt. $520,000 times 40%. Please answer me.
208,000.
208,000. So you see this amount. First of all, treat it as grant. In the same as you received the amount, this amount. Treat it as grant revenue, right? So debt forgiveness. Debt forgiveness. 208,000. This same amount, go and subtract it from your external debt. Go and subtract it from your external debt. So you have external, my God. You go and write this question with confidence and with speed. Answer, please. Answer.
Hey. 312,000.
Okay, good. Footnote done. Foot entries done. Now, this is the most important. This is what I've been waiting for. This one. Valuation of inventory. Valuation of inventory. So, after the exam, they came out. So, I said, man, you this thing, you didn't. Let's teach you this thing. We just saw the table and some of them were confused. Can you imagine? And even this, they made it simple for you. This question, they made it very simple for students. Do you know why? Because they wrote into brackets, not for sale. Just follow the principles. Follow the principles. So they said printing material into brackets, not for sale. So they're telling it's not for sale. They're telling it's not for sale. If I say wants to be wicked on students, they'll say printing material, full stop. They will not tell you whether it's for sale or it's not for sale. You have to know that printing material are for the office use and hence they are not for sale. They'll just write textbook. If they write textbook, you have to go and read the trial balance to know what the company is selling. If you see that it is an institution and you go to the revenue side, you see textbook at the revenue side, maybe sales or revenue from textbook. You go to the credit side of the trial balance, see that revenue from textbook, meaning they are selling textbook. So you have to know that the textbook is for sale. You see office consumable, office consumable. Face consumable, things they consume in office. Obviously, you have to know it's not for sale. But here they made it so simple. And they said printing material into brackets, not for sale. The principle is only one. If that particular goods or inventory is for sale, who can tell me? If it's for sale, who can tell me? How do you value it at the end of the year?
Lower of cost and then
Net realizable value.
God bless you. Lower
Net
of
realizable
cost.
value.
God bless you. Lower of cost and net realizable value if it's for sale. What about if it's not for sale?
Lower of cost and
Replacement cost.
God bless you. That is why they will give you cost of the item. They will give you the net realizable value of the item, and they will give you the replacement cost of the item. Say, please, why would they give us all this? Just to confuse you. They want to know those who have learned, those who know what they want. So you have to know as a student, hey, student of S&D, printing material not for sale. Know that, okay, you compare between the cost and the what? And the replacement cost. Because you don't use the net realizable value because they said it's not for sale. So between this and this, which one is the lower? It is this. Alright. It's the lower. You go to office consumable. The lower of the cost and the net realizable value. Sorry, replacement cost, current replacement cost. So between the cost of 50 and the replacement cost of 70, which one is the lower? The lower is
50.
what? 50.
50.
Is that also? Perfect.
Yeah.
So you see, when you take the balance sheet, anytime you take a balance sheet, I'm talking to you. Cast your mind to any financial statement you've seen. When you take the balance sheet, and you go to the current liability side, you always see inventory there. True of us. That inventory means that the inventory remained in the company at the end of the what? Of the year.
Current asset.
What did I say? I said current what? I said current
Liabilities.
liability.
Current asset.
I intentionally said I wanted to see if you are following. That shows you are following. That's true. You are following. That's good. Yes. Okay, good. So that is that. So you have total inventory at the end of the year will be 195 plus 50. Is that also? This is what we will send into the what? Statement of financial position. Statement of financial position. So let's go to statement of financial position quickly. This here, that's your inventory. 50 plus 197 or 195, right?
195.
245.
Please give me the answer, please.
245.
245. Thank you. You see the same value, go straight to goods and service. Like I say, some of you don't respect. Let's go and do it and just be winning. So come here, come on, right. The first one was what? Let me write inventory. I don't have time. Into brackets, but show the 2 plus 195. So that's subtract it. 245. Winner. Full stop. This is what I want to show you. Assuming they said this is for sale. Assuming, please, we are done. No, I'm done with the treatment. Assuming they said printing material for sale. Assuming they said printing material for sale. They wrote for sale. Assuming they said printing material for sale. It will be the lower between the cost and the net realizable value. That also.
Yes.
It will be the cost. And then, so what will be the answer? Assuming it was for
200.
200. 200. God bless you.
200.
200. God bless you. So simple like that. Can you see that? They could have even brought 5 inventory. You still use the same format to get all of them. Just obey. Just obey, right? Good. We go to the next one. Consumption of fixed capital. So consumption of fixed capital, you have to prepare the PPE schedule. But like I said, that should be the last thing you do, always. The PPE schedule should be the last thing you do. Okay, we go to the 7. 7, due to current economic condition, the long-term investment of government was impaired by 20%. Due to the current economic condition, the long-term investment of government was impaired by 20%. Please, anytime you hear this, and when you hear impairment, it means that the value has reduced. Impairment means that the value of the assets has reduced. That's what it means. Impairment. It means the value of the assets has reduced. So the first thing you do, go and look for the what? Long-term investments and multiply by 20%. Can you see that? Look for long-term investments and multiply by 20%. Long-term investment is an asset. Long-term investment. This one. 160,000. They say the value has reduced by 20%, right? So long-term, I can't do the calculation here. It's not necessary for you to do the same. 160,000. The value has reduced by 20%. So what the impairment amount? How much?
32,000. 32,000.
32,000. You see this 32,000. The impairment. You can treat impairment in two. You can either add it to other expenses. The impairment, you can either add impairment to other expenses or you can add it to goods and services. 2 things. You can either add impairment to goods and services or you can add impairment to other expenses. Anyone you want. Where should you put it, please? Impairment.
Goods and
Goods and services.
Impairment. Okay, so come on, right.
So please, you go to the other expenses because it's not normally.
Please come again.
So I prefer to go to. I suggest you should go to the other expenses because it's not normally transaction based.
Yeah, like I said, it is two. You can either put it under goods and services or impairment, any of them. Okay, so don't worry. If you are preparing financial state, put it under other expenses. No wahala. Are you okay, please? Please, are you okay? Okay, good. Thank you. Good, we are done. Then the second one, like I said, impairment simply means what? A reduction in the value of whatever they are talking about. So as you saw, they said what? Investment property. So come and write investment property. $160,000 minus 32,000. 128,000. But here, any question? This is a full ICA question. Oh. This thing I've solved is a full ICA question.
Sir.
Uh-huh.
Sir, please, a question.
Mm-hmm.
The impairment, I was thinking since it was a loss, like a damage, something, a loss on an investment.
Perfect.
I was thinking it should have been in a bracket, like we should deduct it, or is it because it's already under expenditure? That's why you left it 32,000.
God bless you. God bless you. No, everything here are going to deduct. They are all negative. Are you okay?
Okay.
No, you don't put it in bracket again. No, don't put it in bracket again. It's an expenditure to us. It's an expense to us. It's a reduction. It's an expense to us. If I don't ask,
yes, please.
This is where we deduct. Look at where we did the deduction. You see, 160,000 minus 32,000. You see, you are deducting it here.
Yes, please.
God bless you.
Thank you.
You're welcome.
Hello, Sir Steve.
Yes, please.
Sir Steve, please, why was the inventory subtracted from the goods and services?
The bull. Repeat the question again.
Why was the inventory subtracted from the goods and services?
I've always been saying this. Madam, I beg you, always subtract it from goods and services. Are you okay? You treat it in two folds. One, send to current assets. And two, go and subtract it from goods and services. I think I've explained this over and over again. But you don't worry. Always subtract it from goods and services. I don't want you to confuse yourself. Once you get the inventory amount, always subtract it from goods and services. Please, are you okay?
Okay, thank you.
Always subtract it. I don't want to explain anything to jam your mind. Once you've gotten the concept, go and subtract it. Or let me just quickly touch on it. Madam,
There.
Please, in the course of the year, okay, in the year, we bought total inventory of 2,000. Are you seeing that? In the year, the inventory we began operations with, okay, it was 2,000. We used inventory 2,000 to do our operations. Are you okay? At the end of the year, we still had inventory of 500 cedis remained. This is the inventory we didn't use at all. This inventory we didn't touch them at all. So if I ask you, how much inventory did you use in your operation? What will you say?
1,500.
What is here? Why is it not 2,000?
Because at the beginning of the year, we used the 2,000, but the inventory we didn't even touch was the 500. So you subtracted
500. So how did you get it? You subtract it. It is a closing inventory. At the end of the year, the inventory still remain in the organization. You subtract it from the ones you had for the year. So we subtract 500 from here. That's why we subtract it. Can you see that?
Okay.
Thank
you very much.
So look at something. When printing materials, 1,000. So this is in the course of the year, we have 1,000 printing material. By the end of the year, there was 50. Subtract it. And the same applies to the other one. So that's what happens. Are you okay?
Okay.
Good. That's the concept. You're welcome. Uncle Scooper. Okay, good. We are done. So basic principles. Please, I'm done with you guys. Let's quickly do the PP schedule, then we are out of here. Okay. Let's quickly do the PP schedules. Then you are supposed to go and continue the work. Please, can you mute yourselves? Can you mute yourselves to match up? Can you mute yourselves? So next one. 12. Please mute yourselves, please. I'm getting feedback. God bless you. PP schedule. Can you see that? Good. So PP schedule, these two, you shouldn't waste more than 3 hours here. Somebody will waste a whole lot of time here. Just look at for your assets. Okay. Look at something here. This is your asset. Okay. We have motor vehicle. Can you see your assets? Motor vehicle, land, furniture, long-term investment. They shouldn't go to a PPE schedule. They shouldn't go to a PPE schedule. That's why we have written it already. Okay, it shouldn't go to a PPE schedule. It's just the fiscal assets, the one that we can depreciate. We have motor vehicle, land, and furniture. Motor vehicle, land, and furniture. So please, let's quickly go and write them. Okay. If someone should pick the cost, another person should pick the accumulated depreciation. Always, the debit side is your cost. Always, the debit side is your cost. And always, the credit side is your what?
Accumulated depreciation.
Accumulated depreciation. That's great. That's great. That's great. That's great. That's great. The credit side is your accumulated depreciation, and the debit side is your cost. Always. Always. Keyword. Always. Right? Good. Please, can you? Good. So once the ladies in the house pick the cost, and the gents kindly pick the accumulated depreciation. When I go there, you give it to me. So let's go. So PP schedule quickly. PP schedule. We have first one to be motor vehicle. Second one was land and building, or land and something. And the last one was furniture.
Land and building.
Okay, good. Thank you. Last one was furniture. We have total here. But for the avoidance of doubt, let me put my million here. Let me put my currency sign here for the avoidance of doubt. Even though the one on the top affects it, but let me just put it here. Million. So always you write a cost. So simple. Free marks. Free marks. Yes, the ladies in the house, can you give it to me? Motor vehicle. Cost.
320,000.
320,000. Good. Please, land.
900,000.
900,000. Please, furniture.
250,000.
250. Don't worry yourself and add it. Don't worry yourself. Come to, was there any addition for the year? Did we add a new asset or anything? No. So don't write anything under addition. Are you okay? Now let's go to accumulated depreciation. I mean the one in the trial balance, the credit side of the trial balance. Please give it to me.
120,000.
120,000. Yes. Put it in brackets.
290,000.
290,000. Put it in brackets.
And 42,000.
42,000. Put it in brackets. No need to write it total. Now, was there any? There was no accumulated depreciation for the current year. So let's go depreciation for the year. Depreciation for the year 2021. Depreciation 2021. This is what is important. This is what will give us the consumption of its capital. Are you okay? So they said motor vehicle. How many years? How many years should we depreciate
5
motor
years.
vehicle?
5 years.
5 years.
Motor vehicle, 5 years. Land and building, 20 years. Furniture, 4 years. So go and take the cost of the cost. Oh, straight line means the cost. So take the cost divided by 5 years. This cost. So it will be divided by 5.
64,000.
64,000.
Land and building. 900.
Nine,
Is it 10 years?
45,000. 45,000.
45,000. How many years did you divide it with?
20.
years.
Okay. Then the last one, I think it's 4 years, right? This one.
Yes, 4 years.
Yeah, so divided by 4. What do you get, please?
So 62,500.
So it's always on the cost. Are you okay? It's always on the cost. 62,500.
Yes.
Good. We are done. Please, what's the total? Add this, and add this. The total is what you write here. This is the most important total. Answer, please. Add all the depreciation.
For the motor vehicle is
171,500.
184.
171,500.
Fact. You see this amount? 171,500.
500.
The total.
Goods and
Give me the total for this. This is the most important total. Oh. This is the most important total. Don't go waste your time and go and add cost and depreciation. It's not important. The most important total is this one. When you finish and there's time, you can add these ones. We enable the important thing. In fact, 171,500. Send it to straight. Send it straight to your state of
Consumption
financial
of
compensation.
171,500. Don't put it in bracket again because expense means it's negative. Expense means they are all negative, so don't put it in bracket again. Okay, good. Please give me the totals, please. First one, motor vehicle.
184,000.
Yes, land and building, please.
335.
Furniture and fittings, please. Huh. Come on here. Huh. Akosia. Give me an answer.
104,500.
Good, you are done. So please, when you finish there,
The motor vehicle is 136,600.
It's wrong.
No.
So the answer they are
in fact,
giving is wrong.
I'm not changing it. I'm not changing it.
No, sir, the answers are wrong.
Motor
They
All the
vehicle
did-
answers
is
are wrong.
They
136,600.
they didn't deduct the accumulated depreciation. The answers are wrong.
5,500.
That's how I have to resolve your
The
question.
first
So,
one is 1,360. The second one is
please
565,000.
please take your time. First one is what? 136.
1,360.
Yeah.
Okay. Second one.
6,000. 6,000.
So me and my Mr. Anwar.
No,
136.
100.
136.
sir, are we calculating for the total depreciation of the net
Are we
value?
not dealing with the total depreciation, accumulated depreciation?
Oh, we have that one here.
For the
That one day we have
171,500.
already done it. So that's the 171,500.
Hey, you guys should relax.
Hey,
So I thought
keep quiet.
we will find
It's
the
okay. It's
total
okay. It's
depreciation,
okay.
then
It's
we'll
okay.
find the
It's okay.
carrying
Ceasefire.
amount. So
It's okay. It's okay. This is what you are doing.
So
Please
this
take your time. Take this amount. Take this amount on your calculator. 330,000 minus
Yes.
120,000
Yes.
minus
That's
64,000.
So you get
What do you get?
136,000.
This one I come with my own figures. 136,000.
1,000.
Okay, good. Do same for this, please.
565,000.
565,000. 5,000.
Sir,
It's 5,000. Yes, please. And then 145,500.
500.
Please take your time.
145,500.
Teaching assistant.
Okay, good. We are done. Now, someone
Sir.
was calling, please. Yes, please.
please, are we not losing marks here?
Please tell me why you are losing marks.
Okay, I used to add accumulated depreciation and depreciation, then find
No,
the
I'm
total
not-
before I'll deduct.
Please. You see, let me tell you something.
Okay,
Let me
sir.
tell you something. You have to finish everything within 40 minutes. Are you okay? So
Yes,
please,
sir.
in the examination condition, do what I'm telling you. Focus on finishing. Finish everything. When you finish and you think you have few seconds to spare, you can quickly add these ones. You need this. Are you okay?
Okay, sir.
You need this. You need this. You need this to help you prepare statement of financial position, statement of financial performance. When you finish, come and add these ones. Remember, you've not done all this. So I'm telling you that don't waste time there. You think everything they give a mark, eh? Sure. Don't waste time there. Add these ones. You don't say name marks. I know the SR total you need forget. Why? When you finish and you still have time, go and add them. You need this accumulated depreciation. Depreciation for the year. Don't go waste time and be adding. No. When you finish and you have time, this will give you full marks. This will give you full marks on PPE schedule. This will thing you've done. Okay, thank you. So quickly, let us add all this. Please come and confuse me again. Add this one. We'll also add this. Please add this one for me. Quickly. We have to finish before
59,000
5:30.
direct tax.
59,000 direct.
Okay.
Tax.
Okay, thank you. Let's go to non-tax. Add
Non-tax.
non-tax.
25,500.
25,500
non-tax.
What about grant, please?
222,000.
222. Like this.
Yes, please. Goods and services, 96,150.
96,000.
No, sir, the compensation, sorry.
What do you get?
The
96,000.
compensation, yes, please. 150.
150.
Yes, please.
Okay, good. Goods and services.
73,755.
73,700.
The interest.
Interest.
63,000.
Grant. Hey, sorry.
The external debt.
External debt. Hey, do you have something like that?
Yes.
Say you. Other expenses. Are you talking about other expenses? It's only one figure, so let's.
Okay.
It was just preliminary workings. Okay. It was just preliminary workings. Okay, good. So let's quickly go and post them. My boss, do you have the figures? Are you ready?
So Steve,
Yes.
please, the grant is 222,000.
1110.
Okay, thank you. Are you ready with the figures? Shall we go and post them?
Yes.
Okay, let's go and put them. Let's go. Give it to me, direct tax.
59,000.
59,000.
Yes, please.
Indirect.
119,200.
Non-tax.
25,500.
Grant.
222,000.
Good. Total. Someone should find a total. Let's go to the compensation. What do you get for compensation, please?
So the total is 422,700.
Hey, compensation?
No, total.
The total for
Please give me compensation, or let's go and watch it.
96,150.
Come again, 96,000.
150.
150.
Goods and services, please.
73,755.
Good. Interest.
The interest is 63,000.
Okay. So you have subsidies.
subsidy is 2,800.
2,800. Social
Then the
benefits.
other
Do you have social
social
benefits?
those
No,
yes,
there's no social benefit.
there's social benefit there.
I think the social
There is
benefits.
social
The subsidy is 1,200 and the social benefits rather is 2,800.
The figures are wrong.
Okay. Other expenses, right?
Yes, please.
Answer.
26,000.
26,000.
Yes, please.
Total expenses, please. Total expenses. Give me total expenses. Akosia, add the thing and stop talking.
434,405.
134,400 and what?
434,000.
there is grant expense.
That's what?
Grant.
Grant expense. Okay, thank you. Thank you. It's true. Grant. Grant, how much was it, please?
1,000.
What?
3,000.
3,000 is true. So please give me the figures again, the total again. Total expense.
141,005.
141,005. Hey. 141,005.
So it's not true.
Hey.
So Steve,
Yes.
Yeah.
please, the value for the goods and
437,400.
services is wrong.
Yes.
Goods
The
and
value for
service total.
Yes, it's wrong.
what is it, please?
It's 64755.
755.
647. Please take your time. 64.
755.
Okay.
So the total will be 428,405.
428.
405. And the
Thank you.
total revenue is also wrong.
Hey.
So please, let's go. So let's go
425,700.
there.
425,700.
Next time, I'll come with my own figures again. Trust me, bro. Okay, good. So
So you have a
obviously,
deficit of
deficit. Thank you.
2705.
So deficit is when so you
2705.
always subtract the expenditure from the revenue. So write this revenue 425,700 minus 428,405. Right? Life is simple. Life is simple. I don't know anything. Answer again. Give it to me, madam. You know that the expenditure is more than the revenue.
2705.
What?
2705
into brackets.
Agbena. So that is that. So you see this deficit, this value, the final answer you get here, send it straight to the balance sheet. Go and add it to accumulated fund. So our deficit 2705. Go and put it there. Now, after you are done, this is my favorite part. After you are done, okay, with the posting of a statement of financial performance, go back to the balance sheet, the trial balance. Now go to the credit side. Any entry you have not posted here, okay, we've posted this external debt, cancel it. Any entry you have not posted here, now come and post it to the liability side. It will either go to current liability or non-current liability. Full stop. So see, because I've cancelled all of them, which one have I not cancelled? I've not cancelled 1, 2, and 3. So you realize that preparation of the balance sheet becomes so simple. Just pass 3 entries and you are done, right? So we have accumulated fund 144,050. Remember, what I said about accumulated fund is that accumulated fund's normal position is the credit side. Accumulated fund is supposed to be found at the credit side. In case you see it at the debit side, it means that it is a negative number. But if you see it at the credit side, it is a positive number. So let's go and write accumulated fund 144,005. So accumulated fund 144,050. accumulated fund. So this particular exams, S&D, our highest was 79%. The person that got the highest, this exam, so the person that got the highest was 79%. But still, somebody, in fact, they did well. They did well. Trust me, they did well. Okay. Majority did well. So that is that. So I'm done. Now come to this one, domestic debt.
With the deficit.
What about it, please?
Is it not supposed to be in brackets?
But I can't see brackets. Hey, around here, you cannot see brackets. Some of you, hey, boy, yeah. Good. We have domestic debt. 440,000 domestic debt. 440,000. So go to domestic debt. You know, domestic debt is non-current liability. Domestic debt. 440,000. Cancel it out. Cancel this one out. They have payables 129,000. Payables 129,000. Payables 129,000. Agbena, full stop. Maybe. Now the PPE schedule. Do you remember the PPE schedule?
Yes.
The values we got. You see these ones: motor vehicle, land and building.
So you forgotten receivable.
No, we've not forgotten it. I'll come there. You see this one? This
Yes.
three. I'll go and put it there. Somebody can decide to add this, and get a quota and go and put it there as PPE. I don't believe in that. Go and put it individually. I'll not say anything. Go and put it in. You can add the total and go and put it there. But me, I don't believe in that. Please go and put it there individually. Someone should take this, someone should take this, someone should take this. When I go there, give it to me. Motor vehicle, land and furniture. Are you ready? Let's go. I don't believe in going to put the total. If the total is stronger, wait till BR. Don't do that. Motor vehicles, land and building. Furniture and fittings. Okay, give it to me, please.
136,000.
What?
136,000.
136,000. Yeah, this one, land and building.
565,000.
Furniture and fittings.
565. Says 565. 565.
Okay, thank you. I had 155. Good. Now furniture.
145, 500.
145. Okay, good. You're done. Right? Now let's come to the debit side. My boss that said we forgot it. It's not forgotten. Steps. So come to the debit side. Any transaction you've not posted, you and I know you've posted this on the PPE schedule. Any transaction not posted, receivable 17,600. Go and put an current receivable. Good. 17,600. Now, long-term investment, we have already done on that. That's when we did impairment on it. Cash and cash equivalent, 50,000. Cash and cash equivalent, 50,000. $50K. Some of you, your background is noisy. Who is this? Okay. Godwin, check your background. Godwin, Champon, check your background. I've muted you. Sorry. Good. You have the next one. You're done with it. Oh, you Asa. Asa. Hey, simple like that. Hey. Simple like that too. So please add this for me. Add this for me and give me the total assets.
Then total non-current assets.
974,500.
Hey, which one is that, please? Let me know the one you have.
The non-current assets. Total non-current assets.
Okay, give it to me.
974,500.
This one.
Yes.
What are
Then the
total current
next
assets?
one, 67845.
Add this and this for me. This and this.
104. 2345.
Good. Please add total current liability for me.
30.
149,000.
Total non-current liability.
752,000.
752,000.
2,000.
75,000. Okay, good. Now, this is what we do. Total current liability, accumulated fund and deficit. This, and this, okay, should give you this. So you come and write total. Please, I'll extend to this part. The total of this, and this. You are getting, please don't go and add there. When you get there, don't go and write. Come and write the total here. Maybe. So total liability and accumulated fund is this. A balance it. My name balance it. Don't go and add this. Just let the figure and come and put it there. My name balance it. If you don't do it, go and add the total current liability and accumulated fund, and that's not balance to affect your psychology. Just lift it, put it there, leave it. Agbina. Okay, good. We are done.
But what we have there, when we add it, it will not balance.
It will not balance, eh?
It will balance.
Yes, please.
It will
It will
balance.
balance. It will balance. I've done it. It will balance.
Yeah, to balance.
Who's even interested in balancing it? Who is interested in balancing it? Me, I'm not interested in balancing it, though. I'm interested in getting maximum ticks correct. Okay, good. So we are done. Okay, we are done. Just do these simple principles and we're done. Good. Agbena. Now let me show you something. You see, I added the C part, statement of changes in equity, which was not part of the question. That's why I did not involve it. But assume it was part in the question of the question. Consolidated fund. This is what we will have done. Consolidated fund. Statement of changes in equity. Okay, 3 minutes to 5:30. That's good. So please, this is what you do. All what you have to do, okay, is for you to come and write balance brought down. Changes in equity simply means the accumulated fund. Has there been any changes to accumulated fund? You are going to adjust the accumulated fund. Has there been any changes to accumulated fund? So always go and leave the accumulated fund. Leave the accumulated fund. 144050. So you can put it here. 144050. Did you do any adjustments? You remember some of the questions? The accountant might have made a mistake, error, last year. So you have to correct it. So if there's any correction, you correct it. Okay, but if there's no correction, you just leave it. Are you okay? You remember the one that I say, add equipment, less depreciation. Add the mistake, error, less depreciation. Do you remember those ones? By this question, there was nothing like that. So therefore, you just have to go and do. Then you add the deficit or the surplus. After I do the correction, add the deficit or the surplus from the statement of financial performance for this year. Okay. So statement of financial performance, the deficit was what? The deficit was any 2705. It was deficit.
2705.
2705. So answer, please.
141345.
So this is the statement of change in equity. Ideally, after I do this, okay, after I do this answer I get, I'll just come here. Ideally, you just come here. This answer I get, you just come here and come and write the answer here. You come and write the answer here. So you don't bring this again because I don't know why I was saying. So you don't bring this again. You know why you are having. But then you can still bring it and you are correct. You can still bring it like this and still bring the statement of changes in equity too. So you get ticks here and you get ticks here. We are done. Please, we are done. This is how we do it. Now let me show we are done. Now let me show you how marking is done. In the examination, have a fair idea of how we do the marking. Are you okay? So let's see how marking is done. This is the marking scheme. This is the marking scheme. So statement of financial performance for the year ended 31st December. This is the marking scheme. Can you see that? Can you see the deficit? 2705. It means you all did well, right? Good. Then where do you come here? Workings. Statement of the PP schedule. The PP schedule. Okay. Payable and what have you. Now look at this. It said what? This is the row marking. The row mark. So they said 68 ticks maximum. So you can get 70 ticks, you can get 80 ticks, you can get 90 ticks. But the maximum number of ticks they will allocate marks to is 68 ticks. So if you get 70 ticks, so if this is correct, they will take you. If you finish and you get 70 ticks, correct, they will take only 68. And then 68, no, every tick BI is 0.25. So what it means is that you can actually get some mistakes, or you can get some wrongs. You understand it? And still get your 68 ticks correct, and you get the full marks. You can get 1 or 2 ticks wrong, but if you end up getting about 68 ticks correct, you still get your 17 or 17. Are you okay? So if you get 1 wrong, it means you got it just 0.25 error. 0.252. And that's when you. So please don't worry yourself in balancing it. Just make sure that you pass rightful entry. So this work, yeah, assuming I'm an examiner and I'm marking it. Okay. This thing I'm doing is very important. Assuming I'm an examiner, I'm marking it. This is how I mark it. Correct. You get it? Correct. Then I come here. Okay. I'll come here. Okay. So correct. They'll mark this one too. Where can they mark it? Correct. You understand it? That's how they do it. When they finish, they'll count everything. You can get this wrong, correct. I mean, it doesn't matter. The important thing is that you should get 78 ticks correct. So therefore, I'm pleading with you to constantly solve plenty questions. You can, maybe you don't understand a footnote. You don't understand 1 or 2 footnotes. Maybe you don't understand 1 or 2 footnotes. It does not affect you in getting maximum ticks correct. Maybe I don't understand this footnote. If I get this footnote wrong, it's only 2 ticks I've gotten wrong. I don't understand this footnote. Some of you don't get 1 footnote, but maybe the step, it will affect the entire work because you don't understand 1 footnote. You can decide not to understand 2 footnotes. I don't understand these 2 footnotes. If I don't understand these 2 footnotes, it is just 0.25 times 4, since each one has 4 treatments. And when you multiply 0.25 times 4, is it even up to 1? Yes, it's exactly 1, right? You are getting one mark wrong. So out of 17, you are fighting over. So why are you worrying yourself? Please, you can even just pass this one, the trial balance. Pass the trial balance entries and get maximum ticks correct. And get maximum marks just by passing the trial balance. Then if you're able to do 1 or 2 of the footnotes, you are good to go. But ideally, I will pray that you should be able to do everything. That's why we are learning. Sub questions. So that when you go there, you can finish very early. Don't go and waste 1 hour on preparation of financial statements. Don't go and waste 1 hour on preparation of financial statements. Maximum 40 minutes. Because you have IPSAS. You have analysis of financial statements and the rest. So please, God willing, we will be meeting on Wednesday. Our meeting days are Wednesdays. Done, 3:30 to 5:30. Okay, that's our meeting days. Sundays, we have lectures. So I cannot be meeting you at dawn and meet you on in the evening as well. It's not good. I'll be stressing you so much. But because you and I know why we shifted it to today, because last week Wednesday was a new year and I couldn't afford you. You understand it? We'll be doing this every week. We meet once. Every week we meet once to at least solve 2 questions. The target is to solve 2 questions, not 1 question, 2 questions. But because today is the first time, we are just introducing ourselves to the whole thing. Okay. So please kindly share the link to your friends. It is free of charge. Yes, bring all PSC students in Ghana on board. Let us do this, and let's all of us pass together. My name is Stephen, SMB Professional Institute. Yes, so I'm a facilitator of SMB Professional Institute. I'll meet all of you in class this evening. We have class at exactly 5 p.m. Bye-bye. Go to church. Sorry.